what's up guys? Welcome back to the channel. Welcome back to another video. As you can see, we're looking at Euro USD on a 3-hour chart. And the purpose of this video, guys, is to literally show you how to keep your strategy simple. And really how to keep this strategy simple as well if you trade the strategy that we use here on this particular channel. So let's break down a trade setup that was taken during the US session, and that way you can understand how I try to keep everything that I do within my trading as simple as possible so I can avoid emotional decision making and also avoiding taking losses when I don't need to. All right, so we're looking at Euro USD on 3-hour chart. We can see that we're coming off a reset here on the 3-hour time frame. There's your reset. So we're looking for sells only. All right, this is very important, guys, that we're looking for sells only. All right, so if we go down to a 15-minute time frame, here is the setup. So again, the setup happened in the US session. So as you can see here, if you're looking at just this particular movement of price action, a lot of traders who try to trade this strategy would automatically see this, okay, as a trade setup. And there's nothing wrong with seeing that as a trade setup. I saw that too. The only problem that I had with it is that it was going against my directional bias. Again, my directional bias was to look for sells, was to go down. Okay, so with that being said, with my directional bias being that I'm only interested in looking for sell setups, for me, this would not be a trade setup that I would take. Here's the reason why. If we take all of the rules into consideration that we essentially use, you have a sharp move down, right? Automatically, the only option that you would have here would be a type 1 because it broke the low of Asian session. And then you have first leg, and then here's the second leg. More than 5 candles between the first and second leg, and the second leg gives you a railroad track. So all the factors, okay, that we use to take a trade are there. All right. Here's my problem. The directional bias is wrong. Like, I'm only looking for sells, so I'm going against my directional bias. Okay, now if you take the trade also, to get a 2-to-1, you're literally going to have to go to the very, max of what this trade actually has to offer. All right. So for me, not having a directional bias going in my favor, automatically strike 1, and I do not take trades against my directional bias. Now, what I have found is that if you end up taking these trades like this, that pretty much have everything that you're looking for within your scope, within your confirmations that you want, but it's going against your directional bias, we found that if you take these trades over a 2-year period, you're going to have more losers than more winners. Okay, and so that's the reason why I don't take the trades, because yes, are there going to be some that would work out? Absolutely. But I know that the majority of the time, if I keep taking these trades, I will end up with more losses than winners. And that to me is a deal breaker. So it doesn't make sense for me to take those trades and risk capital on something that I know long term will end up being losers. Now, the trade setup that I actually took was this here. Again, a continuation trade. This right here is the trade. So what did we have? We had the huge move happen in London session, and then right towards the end of the London session, we started with the pullback. Okay, where did the pullback go to? Well, look, it went to the middle of the range. Okay, you think that just magically goes to the middle of the range and then stops? No. If we add on our EMAs, you could see that we basically have the 50 EMA right there on top of price. So we have the pullback at the beginning of the London session going into the US session. We have the EMA right there, the 50, and then also price action that's pinning to the middle of the range. Now, if we zoom in here, okay, for me, the entry comes after this candle right here. Okay, I do not see this as a railroad track. The reason I don't see it as a railroad track is because these bodies are way too small for me, okay, to count this as a railroad track. We want to see nice big bodies, all right? We don't want to see little baby bodies like this as railroad tracks. We want to see big bodies, all right? So for me, this candle right here is everything, because this tells me that market makers are done grabbing orders from the middle of the range. All right, this candle, again, this candle right here basically took out all of this trading that was done in here. Okay, over an hour and a half of trading got liquidated in one candle. So after that candle, for this trade for me to be viable, I need to get this candle to provide a pullback for me. If this candle does not provide a pullback for me, then I just do not get into the trade. I skip it because the risk to reward ratio won't be there. So on this continuation trade, the entry for me was very simple. The entry was at an even number, so 1.06100. Okay, that was the number that needed to be hit for me to get into the trade on a sell limit order. The stop loss obviously goes above the nearest highs, which are these wicks. It's a 12.5 pip stop loss, and then obviously I'm just going for a 2-to-1 risk to reward ratio. Realistically, if I can just get to the bottom of the structure where it was in London, where it's been to before, if I can get a 2-to-1 out of that, that is all that I want, and that is all that I need. And essentially that's exactly what I got. Now, without this pullback, okay, without this blue candle giving me a pullback, guys, this trade does not happen. Okay, this trade does not happen because obviously you're risking way too much. Okay, so it's very important, at least for me, to get pullbacks on entries. It may not have to be for you, but for me, I have to have a pullback because that allows me to get an entry. And so what you'll find is there will be times when the pullback allows you to actually get into the trade setup and have a good risk to reward ratio, where if you don't get a pullback, it may not allow you to get even into the trade. So having that discipline in mind and making sure that you know that, hey, if I don't get this pullback, I'm not entering this trade no matter what, because it doesn't make sense for my risk to reward ratio. So these are all very important factors that go into every single trade that I take. All right. So I hope this video brought you some value, and again, more details, more insight as to what I look for and how I take trades in the market. Guys, do me a favor, like the video, subscribe to the channel. Let me know in the comments, what do you think about the pullback candle? Do you wait for a pullback? Are you the trader that waits for the pullback, or you're a trader that just gets in right away without waiting for the pullback? Let me know in the comments below, guys, and we will see you in the next one. Guys, if you need any more help or you like the content that we provide on this channel, come on over to the FXN Masterclass. It's available right now. What you get essentially is a lifetime membership, a full mentoring course, an advanced course. You get the Blue Summit videos, weekly Q&A sessions every Sunday, group session archives, which that by alone has about 100 hours of content, weekly analysis videos, midweek analysis videos, MT4 and MT5 indicators, a customized trading journal so you could actually journal your trades every day, and then a backtesting journal that you can use to backtest and collect all of your data. Not to mention a mentoring private chat, guys. So all the information is in the link in the description if you want to join now. We look forward to seeing you there, guys.